Good morning, trading world. It is January 17th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The financials shift to the center of attention as earnings from Goldman Sachs and Morgan Stanley are due out. There is an overall flow to the market right now, and I don't see financials diverging from that flow right now. That overall flow is price fighting to go higher while strength dissipates, creating lower highs on your market strength indicators and even most momentum measuring indicators. The lower highs in strength should speak volumes about where we are headed. I have some long-term shorts on financials. The dip prior to and through the open will probably be attributed to the financials as they dip lower on earnings but consolidate around support and begin to grind up for the day. When I was writing all of this and doing my initial reviews of everything, the earnings were not out, but we can go to Goldman Sachs now as earnings are out, and as you can see, we got that dip that I was looking for here, definitely on Goldman Sachs. Morgan Stanley I'm not so sure about because they technically they wasn't as in close to coming down, and as you can see, Morgan got a boost up from its earnings, and if I can remember hearing correct, they got a boost up mainly because the numbers were not good, they were not bad. So looks like a little false hope here in Morgan Stanley. So that's a look at the two primary things that had earnings this morning. As we move forward, the weekly outlook for this week is bullish for the SPY, closing above 398.5 with a possible retracement of around 392. There is dissonance between the technical side, which is bearish, and the quant side, which is bullish. Keep in mind, the monthly outlook was bearish, closing below 382.43 with a possible retracement of around 383. There is dissonance on the monthly as the technical side points bullish and the quant side is bearish. This brings us to the key levels to watch for today. Give me a moment while I bring those up. And here we are with the key levels of the day, starting on the support side. We have our Jack support at 397 to the 396 area, Queen support at 395 to the 394 area, and King support at 393 all the way down to the 390 area. On the resistance side, we have our Jack resistance at 398 to the 399 area, Queen resistance 400 to the 401 area, and then King resistance 402 to the 404 area. The main thesis for today is a small bullish bias, closing above the 398.5 with a projected target high of between 398 and 404. The alternate thesis is bearish, closing below the 398 half with a projected target low of between 397 and 390. The main channel we are in is from 397 up to 416. The main channel below is 397 down to 379. Market strength and breadth gapped down at the open on the last trading day and had a pop to the upside and grinded up from there. In my opinion, we have another gap down in strength and breadth, maybe smaller, then gathering momentum to the upside at some point today. We do have dissonance between the technical side, which is bearish, and the quant side, which is bullish. That brings us to the scenarios of the day. Give me just a moment as I bring those up. All right, our first scenario is going to be our expanded range day structure. We could have an initial push down, then find major support to consolidate around before powering back up the second half of the day. So again, this is our expanded range day structure. All right, here we are with the second scenario, which is going to be our rounded reversal day type structure. We could get a continued push lower towards the queen or king support area, find our midday chop around either that queen or king support area before going back up with the same energy or force we went down with the first part of the day. This is our rounded reversal day type structure. I do also want to make you aware of the vice versa alert. And that vice versa alert is the complete opposite. It's still the rounded reversal day type structure, but instead of a push or continued push lower, we get a continued push up. And that continued push up, we'll see pretty much the same type of activity. Continue push up, find midday chop around either the queen or this time more likely the jack or queen resistance area before spending the second half of the day coming down with the same amount of force that we went up with the first part of the day. So that's the vice versa alert on the rounded reversal day type structure. And our last scenario is going to be our trend day down. We open gap down from the previous close represented by the blue line. We start with a push back toward that previous close and find resistance on or before that previous close. Then we begin the downtrend for the day, better known as our golden window, which is the best time to trade. We usually find midday chop around either the possible queen or king support area. And from there, let me correct this. Not always, but a lot of the times on the trend day model, we usually come out the second half of the day looking to continue the primary trend of the morning, which this would be a downtrend. And that oftentimes plays out in a head fake, where it looks like we want to continue that downtrend, and then we get that head fake, and then at some point, at some time, we get maybe a mild rally into the close. So those are the scenarios for the day. as you can tell, the last two scenarios are pretty much a toss-up between the trend day down and the rounded reversal day type structure. It's going to be interesting to see how we behave at the open to see whether we can break through that previous close. If not, then we're definitely in for that trend day down. And those are the things to look for in differentiating the day types. As always, your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.